Monday, October 3rd, 2016, Monaco 64, home of alternative economics and contrarian views. So I was asked earlier today by a subscriber through a comment if I was going to do a web-bought report for October. It has come out. I bought it yesterday and I went through it. And to be honest, there isn't that much new information there. There are, a lot of things that the web-bought report says that I agree with, which are views that I've had for years, and they seem to be, evolving and developing. So I'll do a very brief summary of this report. It's a controversial subject, the ALTA report and Cliff High and the web-bought. His premise is that everyone's a psychic, so the web-bot scours the internet for data, and then he tries to interpret the data in the immediacy, which is like right now, then short-term, medium-term, and long-term, like going out 30 years. So the main points I would say for my viewers and the stuff that we follow, like markets and precious metals. I'll start with the Canada pop. I've got quite a few viewers from Canada. According to Cliff High, he's interpreted the data, and for Canada, there's a lot of data showing a prosperity wave, a new mining cycle, and he says that this is 18 months in the future from now. So, and he also sees data like gold fever and gold strike. And that makes sense with my view on precious metals and the monetary situation in the world. I wouldn't, not surprised. We've already had quite a rally in the mining shares this year, 2016. So, yeah, that's good news for Canada pop, I guess, prosperity wave. For the Deutsche pop or German pop, the web-bot comes out with data, and Cliff interprets the data, and apparently the peak emotional time for the data related to Deutsche Bank and the German population is October 8th. So towards the end of the week, early next week, he sees things, hotting up in terms of Deutsche Bank. I don't know exactly what's going to happen there. And then the other one that's interesting, and being in the UK, and he's discussed that the previous report, is about London pop. He's still getting a lot of data about London real estate suffering and prices crashing, and he's also getting data about the UK economy going downhill very quickly. I think it's been going downhill already, so I'm not surprised by that. And the other thing that I agree with, and the reason why I think that makes sense, is because of the currency. Our currency has been going down a lot ever since 2008. We're down like almost, about 40% against the dollar. It's been relatively gradual, but it's kind of accelerated recently. And the weak currency that drops sharply and quickly is never good for an economy. So that's, the London pop. And then the other subject he touches upon, and it's got to do with the USA pop and the market entity, is to do with the Federal Reserve. He says that the Federal Reserve is losing and going to be losing a lot of credibility over the month of October, and there's going to be, campaigns from the mainstream and elitist people like George Soros to defend the Federal Reserve. But he thinks, the future isn't bright for the Federal Reserve and central banks in general. And I agree with that, because I was telling my colleagues back in 08-09 that central banks wouldn't last for the next 5-10 years. I guess they're still around, but I think, I'm not surprised, because I understand the mechanism of the monetary system, and the fact that it's starting to make people, the general population, angry because they're starting to realize the scam that central banking is. So don't disagree with him on that. And again, we just have to wait and see what happens. In terms of the elections, he sees a lot of political turmoil in the U.S., and that's not surprising because the U.S. Political picture is so divided and so hostile. There's so many people that hate Hillary and so many people that hate Trump. So nothing surprising there. The other point he touches upon is that the bond market is in a bear market and that yields are going to go up very quickly. I don't agree with him on the 9% figure he sees by the beginning of next year for government bond yields, treasury yields. I think that's, having worked in the markets, I don't think that's realistic. We're now around 160 in the 10-year yield. I don't see that happening. But that's what he sees. I personally made a video beginning of July asking whether the 35-year bull market in treasury bonds had topped. And since then, the market has gone down. I'm not saying, I'm right, but there is a good chance, that we've seen the bottom in yields in July and the top in prices. So I agree with him on that, and he goes on to say that the bear market in bonds or rising interest rates should last well into the next decade. So that's it for the WebBot report. If you'd like to, read the whole thing, it's a PDF document that you can buy on halfpasthuman.com. It's about 30 pages. There's a lot more information there if you're interested. So if you like my video, please like, share, and if you haven't subscribed to my channel yet, please do. If you'd like to donate, there are a few links below in the description for donations. And thanks for watching. Bye.